What's going on, everybody? Welcome to the Snipers Only Institutional Trading Concepts Part 2. Alright, today we're going to definitely break into imbalances and understanding true support and resistance, guys. This is going to be a major concept that you will need to know to have sniper entries and as well as have key levels in the market where you can get that reversal point and get you a nice entry to get some good risk to reward and some nice pips. All right, so let's go ahead and get into it. All right, so first let's talk about what is an imbalance. Okay, on this higher time frame, on a 1 hour time frame, we see price trading back into here and then we rebounded. We basically just reverse here, right? What is an imbalance? An imbalance is simply just when price pushes in one direction without a formal retracement back. All right, and this is, basically because of the banks. All right, and we'll get into that in a minute, but you can see how we have massive volume being pumped into the market. Boom, right? And there is no real retracement. Once we cross this point, it just gets lower and lower until we start to get back into it. Alright, so this is basically considered an imbalance. Okay, and we'll get into that in a minute. You can see that there's a gap where price hasn't came back into this. Okay, let's get into why imbalances occur. Okay, so if you didn't know, you gotta go back into the first video that I posted about bank flow and bank manipulations. All right, we talk specifically about how banks move the market so you can understand why imbalances come, because in the last video I explained that banks push the market in one certain direction to push the market back in a certain direction. And in most cases, when banks push the market in another direction, right, because there's so much money being pumped into the market, we do not get a formal retracement, and that is what causes imbalances in the market, because the market is imbalanced. The market needs to stay at a balanced point so so the banks, are not losing any money as well as not getting, fined or anything like that. Okay, so as we see, banks push the market down. All right, now let's see what kind of tools we can use to identify these imbalances so we can use them when we're trading. Okay, so on this scale, we see that this right here is the last candle that has not been retraced into. Yes, this candle hasn't really been retraced to up here, but here is the most recent. So we're going to use something called a gun box, and we're going to go ahead and boom, right here. And as we can see, this is a key level where price is having heavy reaction. Boom, right? And starts to reverse in another direction. This is a lot of pips that you can be catching on Euro GBP. Okay, so that's just one area. All right, even on this smaller time frame, right? I identified this earlier. We have price, an imbalance of price, where price retraces into. Yes, we have this small little candle right here that did retrace, but this is still considered that imbalance. Boom, right there, and it continues to go higher. Right, we can use this same tool here where we see price. This is the last candle that hasn't been retraced into. We see no retracement to that wick, and this is the first retracement. Boom, bang. All right, so let's break this down. here we see price drop down, and then we see price push up, 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 no retracement, didn't come back down, didn't come back down, up, up, small retracement, up, up. Then we had that massive retracement here. This is the first point of retracement here, and this is the last candle that has not been retraced into. Okay, so think about that. The first point of real retracement and the last candle that has not been retraced into. Use those points to identify that imbalance there. Boom. And then you see major reactions from that point. Now, I like to use the opening to about 50% of the imbalance as my range, but as you can see in this point, we do get a little deep into it. Maybe it's because the real imbalance is up here, right? But that's still, we still didn't just touch 50% in reverse, so we'll leave that there. Okay, but now because we're on this smaller time frame, well, really on a day-to-day basis on a smaller time frame, let's get into a more detailed imbalance and see how we can use this as entries and levels. Okay, so here, all right, let's delete this here. We see that we're in this level here. How can we identify this? Let's just, yeah, this is our level. Okay, so we're in this level, nice little area. Okay, but now let's figure out how to use imbalances as levels. Okay, so on this 30-minute time frame, we see that we have legs of price pushing down, break structure here inside this level that we're at. Okay, and then where do we see an imbalance at? We see price push down in one direction here. First row retracement is right here. Bang. 50% of that is your entry. Bang. I like to put my stop loss above the candle, taking out the low, or I'm going to the next point of interest, which we do smack. Okay, and that's how to use the imbalances. Okay, so now we're gonna go ahead and look at a few more. All right, and that is it. Okay, using imbalances as levels, right? We see price push up, push down, no real retracement. Where's that last candle that had a retracement? That had no retracement, this candle here. We retrace right into it, bang. Okay, we can even see last candle with no real retracement. First point of retracement here. Man, sniper. To 40 pips. Clear liquidity on one side. We got to clear on another side. Bang. Nice 5 risk reward. 200 pips. Easy. Okay. This is how to use the imbalance. 50% of that is what we're looking for. Okay. Even here, a nice little point here. Price pushes down. First retracement. Last candle that hasn't been retraced into here. Right? How does price get into here? Boom. Boom. Right there. Bounces right off. That's how you play the imbalance. Candle hasn't been retraced into. We had this little pullback, but no real retracement. Boom. pushes off. Now direction is going to help you guys the most when using imbalances, because the imbalance will not be, valid if the direction is not in the right point. Okay, for instance, like this. We see this is an imbalance. Yo, sniper, why this imbalance didn't work? It's because we're not going in the right direction. Be aware of liquidity. Be aware of where banks are trying to take people out of the market. Okay? Use imbalances that are going with the direction of the trend, going with the direction of movement and momentum, and you will see a great change in your trading. Stay sniper, stay blessed, not stressed. We're going to continue to drop more content and help you guys become snipers in the market. Let's get it. Stay blessed, not stressed.